Hello guys. So far 2022 has been a very crazy year when you're looking at the investment market. Right now we have the S&P 500 index that is now down by more than 20% year to date. And if you're looking at cryptocurrencies, well then it's even worse. We have Bitcoin that is now down by more than 56% year to date. Everything right now is in free fall and investors are really scared of the future, and investors are right now in extreme peak fear mode. So it is fair to say that 2022 has been a very bad year for us as investors so far. And right now it might be very tempting to buy the dip and buy some cheap cryptocurrencies, buy some cheap stocks, whatever it is that you want to buy. However, it might be a very good idea to hold on to that thought, because a lot of things has happened in the market, especially within the crypto market. And that is exactly what I'm going to be talking about in today's video. This year is most likely going to be the most important year for cryptos ever. And there are some people who have claimed that if things are going to get even worse than they are right now, well then it could very well be the end of what we know as cryptocurrencies today. So with that being said, then let's get started talking about what has actually happened in the crypto market over the last couple of months. Within the last couple of months alone, we have actually seen the collapse of Terra Luna, Celsius suspending withdrawals, Voyager Digital going bankrupt, and the complete collapse of 3 Hours Capital. And there is actually a big potential for many of the firms to go bankrupt within the next couple of months as well. I worry that this is only the tip of the iceberg and that things could actually potentially get a lot worse than it is today. And thereby there is a lot of people that could potentially lose a lot of money if they are not taking their precautions. This is most likely going to be the most important and the most interesting year for cryptos ever. I have personally been an investor within the crypto space since late 2016, back when Bitcoin was trading below $1,000 per coin. So I've been here a long time and I've seen the markets go up and down in value. However, I've never seen anything like what we see today. Back then we saw Bitcoin increasing by more than 2,000%. We saw people becoming randomly millionaires overnight. And then we also had the altcoin market, which completely exploded back then. You could basically buy whatever coin you wanted to buy and you would just see the value of that coin increase. Back then there was also a lot of cryptocurrencies that was being developed, and that's when crypto really started to become interesting to the general public. And then in 2018 the crypto market completely collapsed and we saw negative returns of 90 to 99%. This period of time actually defined the crypto markets as we know it today, so it was a very important time for cryptos. However, this period also resulted in a lot of companies finding cryptos very interesting and saw that cryptos was a good way of getting some profit. So a lot of new companies was being created using cryptocurrencies back then. And a lot of these companies that was created back then have lost billions of dollars recently. And they are about to lose even more. These new firms that was created back then have a big part to play in what is happening today, because these firms are so poorly managed. They are heavily over leveraged. And they're basically taking major risks with your money in order to generate a slightly higher return for themselves. And based on what we've seen so far in the crypto market, I fear there's a lot more to come and that this is only the tip of the iceberg. These things that are going on is basically creating a so-called domino effect. And when one of the larger breaks falls, there is a lot of smaller breaks to follow. And as long as we have the price of crypto that keeps on going down, then you will see more firms going bankrupt and more firms suspending withdrawals. One of the craziest things that is going on right now is that we have FTX, who is actually thinking of buying BlockFi for $25 million, which is completely insane to think about. But even though it sounds like a lot of money, then it actually represents a loss in value of 99%. From their last private valuation, where they had an estimated value of $4.8 billion. And that is saying a lot about what is actually happening in the crypto market right now. It is extremely volatile and people are very unsure of what is going to happen in the future. A billionaire called Mike Novogratz actually recently said that he thinks 2/3 of crypto-focused hedge funds will go bankrupt. With all of these things going on in the crypto market, it is extremely important to look at what you can actually personally do in order to reduce your overall risk. And that is exactly what I'm going to be talking about right now. But before we start talking too much about that, then it is extremely important to understand what it actually is that is making so many crypto firms go bankrupt right now. In order to explain why so many of these firms are going bankrupt, I will use the recent example of 3 Hours Capital. This company was founded back in 2012, and in March this year it had $10 billion in assets. And then in April, just 1 month later, the value of the assets was decreased to $3 billion, which actually represents a loss in value of $7 billion in just 1 month. And that is mainly due to crypto taking a very heavy hit. The problem here is not that the value of the assets is decreasing, but more so that 3 Hours Capital is a heavily over-leveraged firm, which essentially means that they have a lot of debt compared to what they have in assets. Many of you might be thinking, well, how does someone become that heavily over-leveraged? And that is what I'm going to explain right now, because what 3 Hours Capital did was that they went to the bank and they asked for a loan. They got the loan and then they invested the full loan into cryptos. And then they went to someone else and they asked for a second loan. And they used the second loan to pay the interest on the first loan. And then they invested the remaining amount into crypto again. And then they went to the third guy, did the exact same thing, and so on. And they kept on doing this until they basically had lended money from everyone that they knew of. And they invested all of it into the crypto market. The thing about this strategy is that it actually works really well when the value of the things that you're buying from the loans are increasing in value, but you have a serious problem when the value of the things that you buy for loaned money decreases in value. And that is exactly what happened to 3 Hours Capital. The way in which 3 Hours Capital was supposed to repay the loans is that they invested the full loan into the crypto market, and then they would basically sell off their cryptocurrencies and repay the loan. However, when the value of the cryptos fall, well, then they are in problems. And a really good example of this could be that if I wanted to invest in something, and I went to the bank and I asked for $1,000 to invest in a given stock, and I bought this stock because I got the loan. However, 1 month later, this stock actually decreased in value and this stock is now only worth $900. If I had to repay the bank $1,000 1 month after, I would now be in serious problems because I would miss $100 in order to repay my loan. And that is exactly what happened to 3 Hours Capital. They were unable to pay their loans because they had invested so much at extremely high prices. And when the price of cryptos go below that point, well, then they were in serious problems and they were actually unable to pay off their debt, and that is when you have to file for bankruptcy. So that is essentially what happened to 3 Hours Capital. They took in so much debt and they took in so much risk, and things just went the other way and they had to default on their debts. As you might have learned by now, well, then crypto is a very risky place right now. However, there are certain things that you as an investor can do in order to limit the risk of investing into crypto. And that is exactly what I'm going to be talking about now. Very many crypto investors, especially newer crypto investors, well, they're basically buying cryptocurrencies on online exchanges and then they deposit their cryptocurrencies onto these online exchanges as well and just let their coins sit there. When you do that, there are certain risks that you should be aware of. And the first risk that you should be aware of is that the exchange platform where you buy and sell, well, that can go bankrupt. The chance of a crypto exchange actually going bankrupt is a fear factor that every single crypto investor should have, because it is something that does happen. And right now it is actually happening a lot more frequently than what we would have hoped for. If the exchange goes bankrupt, well, then they can actually freeze all of your assets, which essentially means that you are not able to sell or buy any cryptos, you're not able to put your cryptos away, it is basically stuck on there. And if you have some money deposited on the website, well, that can actually get stuck there as well. The reason for this is because all of the regulations there is around crypto is extremely vague. It is a very new area and they haven't done much about it yet. So it is extremely risky and it is a liability that you definitely should be aware of. So basically when you buy crypto on an online exchange, then you're actually opening yourself up for the liability of having your assets on this specific website frozen, which essentially means that you are not able to do anything about it at all. Coinbase actually made a recent filing about this where they said that the user's crypto should be considered the property of the bankruptcy stage. if such an event were to occur. This basically means that if Coinbase were to go bankrupt, well, then you don't get any of your assets back and you don't have any right to the coins that you own on this website. So that is something you definitely should be aware of. The second thing that can happen when you have your coins online is that everything that is online can be hacked. And even though very many people they assume that crypto is really safe, which it actually also is, well, then the website that you have your cryptos on might not be as safe as you think it is. This is actually something that already has happened for many companies, also larger crypto companies in recent times. We have seen it happen with Mt. Gox, KuCoin, Binance, and many others. And the online exchange where you have your cryptos on, well, they are actually not responsible for your cryptocurrencies. So this essentially means that if your online exchange gets hacked and you lose all of your cryptos, well, then this online exchange is actually not obligated to give you your cryptos back. That is your own liability and your own risk. So that is also something you definitely should be aware of if you have your cryptocurrencies on an online exchange. To sum all of it up, well, then if you buy and you deposit all of your coins onto public exchanges, well, then you basically are at the risk of this exchange either going bankrupt or being hacked. In both cases, it can end up with all of your coins and assets being frozen and you're unable to put them away from the website and onto your bank or whatever it is that you want to do with them. You can also, in the worst case scenario, end up losing everything that you have in cryptos. So there are definitely some risks that you should be aware of. However, there is also some things that you can do in order to actually reduce and even get rid of these risks, and that is what I'm going to be talking about right now. Luckily, there are some guys that have developed an amazing piece of hardware because they have developed a hard drive where you can store all of your coins. So you are basically able to take all of your coins from online to offline, which could be a very good idea. The benefit of doing this is of course that when your coins goes offline, well, then they can't be hacked and only you own the right to these coins. So what this actually means is that no matter what happens to the crypto market, well, then you will always own the right to the coins that you have on your hard drive. And that is exactly what you want to have. The majority of people, well, they tend to use the Trezor or the Ledger in order to store their coins, and they both work great. The second thing that you should always do when you're investing is basically being careful. You should never invest more than what you're willing to lose. This might sound extremely cliche and you've probably heard it 1,000 times before. However, it is completely true and it is so important to think about, especially when you are investing into something as volatile as crypto. That was all I had in today's video. I hope that you liked the video, and if you did, then please press the like button below the video and subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.